Good afternoon, everybody. Welcome to our webinar today. Our topic today is how to trade CFDs, contracts for difference. So while we're waiting for more people to log on, I see there's quite a little rush going on now. Can we just do a quick sound check while we're still waiting? Just type in the question box if you can hear me. I appreciate that. Yes, great. You guys are fast, eh? Okay. Yeah, Denise, you won't be able to ask questions, you'll be able to type questions. So that's why I've muted everybody. Okay, great. Thank you very much. All good. Excellent. Okay, let's get going. Here's my agenda for today. We're going to touch on what are contracts for difference, what are CFDs, and obviously the benefits from that. And obviously being a bit of a trading theme, I thought I'd discuss the three trading styles and what is suitable for CFDs as such and how I trade them. But also I want to spend more time on the actual platform. So I'll just take some screen dumps, how to place a trade, how to use a stop loss facility and things like that. And if we've got time, I'll just highlight some of our upcoming events. There's quite a few webinars lined up. Okay. Guys, like we do with every webinar, this presentation is being recorded. So those of you on this webinar, I'll be sending you the PDF version of the PowerPoint presentation as well as the recording. And obviously the idea there is for you to review it, and obviously any questions you might have post this presentation is to send me any questions you might have, and we'll take it from there. But I also try and handle any of the questions near the end of the webinar, and we'll take it from there. Okay, so let's get started. What are the benefits? But before we discuss benefits, what are contracts for difference? First of all, obviously, the word CFD stands for contracts for difference, and basically it's a contract between two parties. Number one, yourself, the client, and obviously PSG Wealth, the stockbroker. But the idea is that we're going to settle this contract at the close of whenever you want to close the contract. There's no stipulated time period like we have for single stock futures. So whenever you want to close out the contract, it'll be the difference between the opening price and the closing price. So if I had to put it mildly, is you're betting the direction of the market, and hopefully you bet it right. And the difference between where you open up the contract and where you close it have to be profitable for you. So we're talking about derivatives today. So what is a derivative? It derives its value on an underlying share. So you still have to do your fundamental homework or your technical homework, be it on SASL or on Anglos, etc. Now at PSG Online, we only trade on the top 100 shares. Number one, they're liquid. Number two, obviously they better quality stocks. So we break it down into what we call the top 40 large caps, and then we give a margin. We ask for initial margin or initial deposit of 15%. Then the next 60 companies of that 100 list is what we call what is referred to as the mid caps. We ask for a slightly higher or slightly bigger margin. Deposit 17.5%. But as I say, at PSG, we only trade the top 100 shares. And I'll show you a list just now in the slides where you would find that list. So still talking about some of the terminology, and I said we're talking about betting direction, we talk about trading direction, some of the terminology. I know we have some novices on this presentation. It's always difficult to try and determine at what level do I pitch this presentation. So I'm taking it from novice to intermediate to a bit more advanced. So when it comes to terminology, we talk about going long. That's for someone who wants to take advantage of rising prices. We talk about going short. You anticipate the market to fall, and you want to take advantage of falling prices. You'll see on that list just now, some of those shares you won't be able to go short because remember PSG goes into the market and actually gets the shares script, the actual shares. We hold it as collateral. So some of these shares are not so tradable, or the company itself might have put out a request not to short the shares, so we won't be able to get those shares, and those are the shares you won't be able to go short of, so it'll be long only. I mentioned just now we talk about initial margin. So being a derivative, we also talk about a geared product. So it's like buying a house. You put out a 10% deposit on a R1 million house, bring 100,000 Rand down, and you have access to your R1 million house. At the end of the day, with a property, who owns the property is the banks. So here we have a scenario where you're putting down 15% margin to have 100% exposure. Remember, you don't actually have the shares. It's a derivative, so you're not a shareholder. That was a top 40 stock. If it's a mid-cap stock, you're putting down 17.5% margin or deposit. Now, unlike a bank deposit, with initial margin, you're actually earning interest on that deposit. Okay, so when it comes to risk management or risk as such, those of you that are completely new to the market, please understand that CFDs are geared products, they leverage. So this is where it can be dangerous if you don't understand how to work with leverage or gearing, because you're putting down 15% deposit to have 100% exposure. So you're geared 6 times. That can also be multiplied up to 10 times. So if the underlying moves 1 rand, your derivative can move 6 times that. Okay, so it magnifies your profits, and obviously on the other side of the coin, it can also magnify your losses. So it's a great tool to use if you understand how gearing works, but also obviously it is dangerous if you don't. Okay, let's move on. So I mentioned just now the list of shares. So you open up you register for PHG online, be it an equity account or in this situation a CET account. You've got a username and password. You log in. You'll find there's a button. I'll bring my little cursor in here quickly, my little spotlight. You'll click on the little button called Indices, then click on the button called Future CFDs, and there's a little tab called CFDs List Available. So there we go. It highlights the list of shares, obviously the share codes. You need to know the share codes, the long name of the share, and obviously what sector. So it's useful to orientate yourself into the market and see what shares are available. So I always suggest take this list and print it out because you need to know the share codes. But also you can see the margin required, 17.5%, so you assume that there'll be a mid-cap stock. So if I go down this list here, where's my first? There we go, right at the bottom here. Discovery Holdings is a top 40 stock, and margin required there is 15%. Okay. So that's where you would find it. Let's quickly move on. So when it comes to PHG, the reason why we also trade the top 100 companies, as I say, they're liquid, they are tradable, better quality stocks. There's only one requirement from PHG side regarding limits, call it that. Your minimum transaction value must be at least 25,000. Less than that is not economically viable. So if your exposure is 25,000 and your margin is 15% deposits, 15% of 25,000 for top 40 stock, you'll need 3,750 Rand as an initial margin. So this is not for everyone. Some people might say, gee, I don't have as funds available. And maybe single stock futures might be better because there you've got a fixed amount in per contract, and those amounts are much smaller. So on 25,000 for a mid-cap stock, you need to put on 4,375 Rand. That money gets ring-fenced. That initial deposit gets ring-fenced. Maybe you're earning interest on it. We're talking about interest just now, but you always have to keep it at 15%. Now, that's a part people understand, putting down initial margin. But remember, you need to keep it there on a daily basis. And this is where the second part comes in. We have what I call a variation margin. I call it a top-up. So this is where you analyze profits and losses on a daily basis. You know, compared to equities, you might have a paper profit. You might have made 10% until such time you actually sell the shares, the money be in your account. When it comes to derivatives on a daily basis, and this is a process, we call it mark to market, the profits will be put in your account tonight. If there's losses, the losses will be taken out of your account tonight. So that's why that 15%, they use that as a good faith deposit, and that's where they take the money from. You need to top up that and keep it at 15% all the time. Okay, so if you don't, there's two scenarios. Obviously, if you don't have the cash available in your account, and I always suggest you do always have some spare cash available for those, what you call a margin call. So the next morning in your statement, you'll get a margin call. In the big bracket, the same margin call. We allow you up to 1,000 Rand. Over 1,000 Rand, you'll get a margin call. Okay, so you either need a deposit, variation margin, or you need to close out some of those shares to pay the difference. Okay. As opposed to single stock futures, we trade dividend neutral single stock futures. With CFDs, you actually receive what we call a synthetic dividend. Remember, you're not a shareholder, you're not buying shares, so it's not a real dividend, it's a synthetic dividend. That's number one. That's a positive, so you're getting advantage of the capital growth as well as the dividend income. Unfortunately, you're not a shareholder, so you can't go vote at the AGM. So those are some of what are the negatives as such. Okay. Let's move forward. Let's talk about trading costs. So we've spoken already about them being capital efficient. You know, you only need to put down 15% deposit to have 100% exposure, but also they're very, very cheap. So you've got very low brokerage costs, as opposed to equity trading at PSG. Our minimum, our sliding scale starts at 0.9. With CFDs, we started, our commission is at 0.4. Okay, that's excluding that. But we are open to negotiate those rates for the larger and the more active traders. That's with retrospectively. We'll see how you trade, and then we can negotiate on that. So number one, brokerage, and obviously VAT. Those are only two real costs that we have for trading. And if you do decide if you want to go short using CFDs, unfortunately, there's also remember we have to go into the market to borrow that script. There's a cost involved there. If you're going short, it's 1.5% per annum. And that's charged per day on open positions, but a minimum of 250 Rand per position. Now, those of you that do want to go short, I always suggest that you have also a single stock futures account. So you can move your funds between your CFD and your single stocks, because you'll save yourself 1.5% per annum, or minimum of 250 Rand. So it's up to you. I prefer that. If I can save costs anyway, that's what I do personally. So here's the example. I want to go buy 1,000 ABC shares at 25 Rand. So in this example, perfect example where our exposure is 25,000. Remember, that's the minimum required. So it's a top 40 stock. So my initial deposit initial margin required is 15% of 25,000 is 3,750 Rand. So my gearing in this situation is 6.67 times. Okay, so that's the 25,000 divided by my margin. That's our gearing. My brokerage is calculated as my exposure times 0.4. So it's cost 100 Rand to have 25,000 Rand exposure. If this was a normal equity trade at 0.9%, it would cost me 225 Rand. Okay, can you see why a lot of people trade CFDs or single stock futures? Because obviously lower costs. Okay, and then obviously VAT on that 100 Rand is 14%, is 14 Rand. So your total cost is 114. Okay, so that's your trading costs. Let's talk about, remember you're borrowing 85%, so there's interest involved there. So let's talk about some interest calculations. Interest is charged on the total value of the exposure or the open position. So if you're long, you get charged what they call suffix rate plus 2%. If you're short, so in other words, you've been charged interest if you're long, and if you're short, you receive interest. Okay, so well, the rate is much lower if you're short. So compared to putting your money in the banks and things like that, you're getting a much you're getting very borrowing money from the banks rather. You're getting much very competitive rates here at when you're trading CFDs. So in our example, suffix rate, this is today, and you see my little star there. This is calculated on a daily basis. So suffix rate at the moment is 5.81 plus 2, so that's how we get to that 7.81. Our exposure is 25,000 times the 781. It depends how long you want to obviously have it. If it was for the year, you'd be paying 1,952.50. So divided by 365, it's equivalent of 5.35. That's what it costs you per day. So depends on how many days you have it open, weeks, months, whatever the case might be. As long as the share price is going up, that's negligible. Remember I said to you, you put out an initial margin and you earn interest on that. That's earned at the JSE trustees rate. Now, obviously, that's on a daily basis. There are millions and millions of Rand going to this JSE trustees, or billions rather, going to that trustee account every single day. So they calculate on a monthly basis. In this situation, this is this month's 4.78%. So my margin of 3,750 Rand, I'm going to get 179 Rand for the year, divided by 365. So that calculates out to 49 cents a day. Okay, so this gives you some background regarding the interest calculations, obviously interest charge and interest received on your margin. Okay, very, very simple. Okay, so I believe that CFDs are less complex financial instruments compared to like single stock futures, where the costing is a bit more involved. So yeah, that's a bit of background there. So what are the benefits? We've highlighted already. They're capital efficient. You need to put on 15%. Low trading costs, 0.4%. As opposed to single stock futures, there's no expiry date. And this is what I want to highlight in today's presentation. Those of you that are transitioning from being a long-term investor to maybe a bit more of a trader. You know, I like CFDs from a position trading point of view, and I should highlight this for you. We'll talk position trading just now, but as a position trader, this is a bit more longer term trading. You're going to save yourself 1% because with single stock futures, there's a rollover cost. Every quarter, the single stock futures contract rolls over to the next contract, and there's a cost, 0.25% of the exposure per quarter. So there's 4 quarters. Obviously, you're going to save yourself 1%. As long as you can sustain that interest on a daily basis, remember the 5 rand I was talking about, I believe it's a great tool to use. I'll go here a question mark if you want to hedge your current portfolio, especially from a short point of view. Question mark, I prefer single stock futures. You save yourself on that 250 Rand or the 1.5% per annum. Okay. But also, as I mentioned just now, you have all the benefits of a normal share portfolio in the sense of the capital growth as well as getting that dividend. Remember, it's a synthetic dividend. And we were talking about a platform just now. You have direct market access. So you have access to live prices straight away. You can place your orders after hours, and we can discuss that also, and you also have access to stops. Okay. So those are some of the benefits. And as I say, the disadvantages, obviously, it might not be for everybody because the margin requirement is much higher. And obviously, that's scrip lending. And obviously, being a shareholder, you're not a shareholder, so you can't vote at the AGM. But if you're a trader, you don't care. Yeah, so those are some of the background. Let me just quickly touch on trading styles, and I just want to give you some background. You know, I know, as I said, some of you are novices and have never traded before. So distinguish between investing and trading, because a lot of people think it's the same thing. So 2 different strategies. So let's quickly just touch on what is investing. Remember that the purpose of investing is to build wealth slowly over the long time, over the long time horizon. Okay. Most of the time, we're using what they call a buy and hold approach. You'll be investing in things like equities and exchange-traded funds or exchange-traded products, and also into unit trusts. Those are the main things people use for investing. But you know, what do we do with investing? There are cycles, market cyclical. So as an investor, we anticipate there will be times when the market pulls back. Okay, and we ride those predictable downtrends out. Okay, so with the hope that those prices will recover. So as long as we're buying into good quality, undervalued quality companies, we hope those companies will recover. That's what a long-term investor does. So your long-term profits or long-term returns can also be further improved by reinvesting dividends. And I like to buy into companies that are quality, undervalued, and obviously paying at least 5% dividends. You reinvest those dividends, you're adding to the compounding. But the main idea is that we're using for retirement. That's what a lot of people use these kind of investments for. You want to provide stability and income during your retirement years. Okay, that's quickly as an investor. As a trader, it's more buying and selling. So hopefully you're buying the right time and obviously selling it for profit. Alternatively, selling, cut your losses quickly. But again, we use equities, and this is where a lot of guys, or where the derivative products like single stock futures, contracts for difference, and currency futures. Oh, there's a spelling mistake. Sorry, I didn't see that. And currency futures and index futures are what's the word? Popular. Okay, but my intention is obviously to generate profits, and my goal is also to outperform the buy and hold strategy. Okay. So trading profits are achieved through buying low and selling high. So I'm buying something at 5 Rand and selling at 10 Rand. That's if you want to take advantage of rising prices. If I want to go short, I sell something at 10 Rand and buy it back at 5 Rand. I'm still making 5 Rand. Okay. So that just gives you some of the ideas of trading. Okay. Let's talk about the different styles of trading now. So the idea of trading is you're going to enter and exit in a much shorter period of time as opposed to buying and holding. So it will vary from a few seconds to a few to months to years. Okay, and as I say, it depends on your trading style. There are 3 different trading styles. Now we talk about trading styles, and then we talk about trading strategies. Some of you might be day traders, so your time horizon is very short term, and a day trader will not hold a position overnight. Okay, he's worried about things happening, and I'm happy to close up my position. I've taken my little profits. I've traded intraday. That's a day trader. Most of our clients, myself included, are what we call swing traders. It says here short term, from a few days to weeks. The average is about, they say about 4 days. With our newsletter, we've seen that it's about 12 days that we hold a position open. So it's again from a few days to a few weeks. And then we have the position traders. This is more the longer term, from a few months to years. Okay, and that's where CFDs are so good for that. Okay, but let's go into each one of these styles in more detail. Day trading. I know some of you might be hoping that you'll be a day trader. We sit on the trading desk once in a while. We do trade the Aussie futures and things like that. But I've learned over the years I'm not suitable for it because it's a full-time job. So you have to open your open positions have to be constantly monitored. Here in South Africa, we're still far behind America with their black box trading or the algorithms. For the normal man on the street, he has to physically watch it all the time. As a day trader, it's hectic. Okay, but the whole idea is that we're entering and exiting trades on the same day. We don't hold positions overnight. So we usually either get out at our target price or we get stopped out. Okay. We use technical analysis. Before trading, most of the time we're using technical analysis. We find exploiting intraday price fluctuations. Now I find to be successful as a day trader, you must be knowledgeable of upcoming events, be it PPI figures or trade deficits, whatever the case might be, market moving events, or anticipate a share to come out with a trading update, a trading statement. It's better than expected. You got to be in that share already. Okay, those are the kind of things I find it's the only way to be that. So you have to have your finger on the pulse on those kind of informations. But a day trader be using more the intraday charts. We talk about minute by minute or tick by tick. So it's either minute by minute or volume-based charting. Unfortunately, we've only got the swordfish, which only tracks the Aussie index at this point in time for live prices. We are looking at other options. So at this point in time, intraday pricing not available as such with charts. If I refer to charts, but remember the idea is from a few minutes to a few hours. Say large price movements are very uncommon, so you'll be trading frequently intraday. You'll grab a few percentage points here and there. Okay, so anyway, to really take advantage of day trading, you need to trade margin, and size must be quite big. Remember, the minimum requirement on CFDs is at least 25,000 exposure. I find the guys that do trade the day trading, the size of the trades are much bigger. So there we talk about position sizing. Doesn't really apply here, but it's obviously risk management very, very important. This is where most of you will be, what we call swing trading. This will hold from a period from a few days to a few weeks. Okay, you attempt to capture short-term market moves. Now, I always try to identify sideways markets when the market's consolidating, and I use my trading strategy. I use is what I call breakout trading. I wait for breakout above resistance, and then I'll enter the trade long. If it breaks down through support, I'll go short. Those are the kind of strategies I use. Very simple technical analysis, breakout of support and resistance trend lines. Again, we're still using a technical analysis. Mainly we're using price action, so I use candlesticks as my primary indicator for entry and exit points. But yeah, it says we pay a lot of attention to fundamentals. I still bring in a bit of fundamentals. I need to know any upcoming events that could affect the share, be it the trading statement or dividend payouts or whatever the case might be. But there's three scenarios. We're going to trade that. We're going to exit the trade either at a previously established target price, we touched on it just now, or we get stopped out and the market moves against us, or if the share hasn't really moved, and this is where it comes to shares that are not tradable or illiquid. Some of those property companies are not very tradable and they don't move. So over a period of time, maybe 5 days, if the share hasn't moved, I get out. So I might take a small little dip on the brokerage side. Okay, so the average trade. This is from Investopedia. This average is from 1 to 4 days. That's the average amount of time. I find with our trades is about 12 days. So you don't need a lot of time to be watching this all the time. So you can use it, and a lot of people gravitate towards this style of trading. Okay. So doesn't require a lot of time. And then obviously, this is where I want to focus on position trading. This is the longest time frame, as I say, from a few months to a few years. You use a combination of technical and fundamentals. So as I say, this is we're transitioning from a buy and hold investor to a trader. And I find a lot of people are more position traders than swing traders. Some of you will be swing traders. There's nothing wrong with having some trades that are swing trades and some of them position trades, but make a decision up front how long you want to hold it. So we're still using charts, but your time horizon is much longer. So you're using weekly and monthly charts. So we're ignoring short-term price fluctuations. But we identify the long-term trends. So I like to use things like the crossover of the 200-day or the 50-day crossing over a 200-day moving average to establish you're in a long trend or long position, and vice versa. I use MACDs. I don't trade so often. I might trade 2 or 3 times a year on the crossover, the MACD, moving average convergence, divergence through the zero line, up and down. Okay. So as opposed to a buy and hold investor, remember, buy and hold investor can only take advantage of rising prices. As a CFD trader, or obviously as a position trader, you can go long and short. Okay, just remember the costs involved in going short. So that gives you quickly some background. What are you at this point in time? What suits you depends on a number of factors. Your trading account, how much funds you got to trade with. I always believe in the more funds you got, the better. So I'm working on 100,000 Rand. The reason why I say that, you've got more flexibility. We're talking about position sizing in a few slides now, but 100,000, you know, you can have quite a few positions open and still be able to handle those margin calls and things like that. What's more important is not so much the money, it's time. Okay, the amount of time dedicated for trading. So, you know, we've spoken about in previous webinars, we're talking about a trading plan. You do the homework at night and you confirm it in the morning again. That's why I spend most of my time outside trading hours when I'm watching the market. So how much time can you do that on a regular basis? Intraday, once you place the order, the system's going to handle that for you. So depends on your level of trading experience. If you've never traded shares before or equities, I sincerely recommend you first learn to trade shares, understand what moves the share up and down, what are the drivers. Yes, supply and demand, but what are the drivers? Understand how to place orders, and I suggest play around with a simulator. We have an equity simulator. You'll gain confidence from your stock picking abilities, but more importantly, understand how the trading platform works. The disadvantage of the simulator, obviously, there's no emotions involved. So, you know, you can progress from there to paper trading, do it on paper. Alternatively, just start small. The worst case scenario is starting with a margin of 5,000 Rand, 3,050 Rand, and you get 1,000 Rand for variation margin. That's what you're risking, but then you have to be watching very, very carefully. So it's not for everybody. It depends on your personality and also your risk tolerance. Now, there are 4 kinds of traders. We talk about a conservative trader. That's a bit of a oxymoron. There's no such thing as a conservative trader. That's someone looking for low risk, low returns. You know, you want to put your money in the post office. This is not for you. We want to focus on the investors that are what I call the prudent traders, rather. You want to go for high returns at low risk. In other words, manageable risk. You're calculating your risk up front. Some of you might be what we call aggressive traders. This is going for high risk, high returns, but you should never be in the 4th category, what I call the gamblers or the speculators, where you're going for high risk at low returns. You should never be there. To me, it's a no-brainer. You should not be in that sector. You're throwing money away. Okay, so that helps you a bit. Let's go into how does the platform work. Here's a screenshot of a CFD portfolio. I know you have one share in it, NASPAS. It's got 264 shares. Now, this share was trading, it was a few days ago. When they bought the share, the average cost was 1,526 Rand, 93 cents. Okay, so that multiplied by that's your exposure, 403,000 Rand. What did we need to put down? We need to put down 15%. So in this scenario, we put down 60,000 Rand. Bring my cursor in here again. Okay, 60,000 Rand to have that exposure. Can you see where what I said is capital efficient? And since then, the share's gone up. We made gone up 8%, 33,000 Rand we made in profit. But that, as a percentage of my margin, we have 55%. You see where it gets exciting. Okay, so that's just a quick introduction to the platform. Let me show you how to place a trade. Let me go to the next slide. Okay, so this is just hypothetically. Let's say, for example, I was looking at Telkom yesterday. It's fallen, broken through a what I call a rising wedge formation, and there's been quite a few down days. And yeah, we're trading quite close to oversold territory. And let's say, for example, you assume that we've hit the bottom. It's trading slightly just below the 50-day moving average, but it's meeting some support. Okay, so in this scenario, and as I say, I'm being very I'm sucking here. Let's go say we bought it at 70 Rand yesterday. My target price in this scenario, because remember we're trading within a channel. So let's say, for example, my target price, if it's to try and beat the previous resistance high, which was 85 Rand. So I bought at 70 Rand, my target is 85 Rand, my stop loss. And in this scenario, gee, I'm worried, it might drop below the support level, but so I want a very tight stop. So I've got a 1 Rand lower at 69 Rand. You might go so far as a 200-day moving average, way down here, which is at 60 bucks. Okay, so it gives you a 10 Rand risk scenario. That's the one scenario. But I'm willing to risk 1 Rand in this scenario to make 15 Rand. Would you put on the trade? And as we talk about a risk-reward ratio, I'm willing to risk 1 Rand to make 15 Rand. So my potential reward in this trade is 21%. That's at 15 Rand as a percentage of my entry price. So this is a mid-cap stock, so the margin is 17.5%. So that profit as a percentage of my margin, I've got a potential of making 122%. Would you go for it? Yes. Okay. So that's what we talk about doing the paperwork before putting on the trade. Now, obviously, from a risk point of view, we're talking about stop loss. From position side of point of view, we talk about money, the capital allocation. That's what I'm trying to use. If I've got 100,000 Rand, I never want to lose more than 2%, or let me allocate 2% per trade. So on 100,000 Rand is 2,000 Rand. Divide 2,000 Rand by my risk in this situation is 1 Rand. I can go buy 2,000 shares, 2,000 shares on Telkom right now. If the share drops to my stop loss, what's the worst case scenario? I've lost 2% of my money. So you bring in the two aspects from a money management point of view: position sizing and stop loss. That's what it's all about. Let me talk about the platform. So if I had to go place this kind of trade now, sorry, just get rid of this little spotlight again. So on the platform, again, you log in with your username and password. Go click on new order. That's just step one. Click on new order. Obviously, first of all, you select your CFD account. So you need to open up a CFD account, go through the whole process of FICA and all that kind of stuff. Once the account is open, it takes about 48 hours. And obviously transfer funds into the account. You click on new order, and you enter the share code. Now, I've done the homework already. Technically, it's fundamentals. I know the share code is TKG. The first thing you want to look at, it tells me margin requirement. Required is 17.5%. In this scenario, it's going to cost me, it's going to be around about 5,977 Rand margin. Okay? So that's step one. So once I've looked at that, now I can go to select a little button here called new order. Now I want to actually place a trade. So I want to go long, take advantage of rising prices. So I select the radio button called long open. How many shares I want to buy? 500 shares at 70 Rand. Okay, the order is only good for today. With CFDs, if the order is not matched at 5 o'clock, the order gets cancelled. So I click on submit, the order goes into the market. Remember, I'm a willing buyer. You're still buying a share, like we buy with normal equity. I want to buy a share, Telkom. I need a willing seller at that price. Okay, so I click on submit, goes into my order book. As soon as the order is matched, it appears obviously in your holdings. Come back straight away and go click on new order again and implement your stop loss. It's not about making money, it's avoiding capital losses. So remember in our scenario here, bring my cursor in again. I click on price watch. Now there's two steps. I select my price watch as my trigger and my stop order is my bullet. So you have to use it together. So step one, I select price watch. Remember I'm long, so I don't want the prices to drop. So if it drops below a certain price limit, in this situation, 69 Rand. Okay, remember it's always in cents. So 69 Rand, 1 Rand lower. If it drops that level, it's a trigger going to the market as a potential sell. Okay, that's step one. Step two, very importantly, is to, let me get rid of this cursor again. select the stop order. Very, very important. They have to work together. So I select stop order. What if my order is triggered and goes into the market? What do I want the system to do? Close out my trade. Okay. So close out my trade. Spotlight out. I select close. Okay. How many shares? I believe in closing out my whole contract. You want to be half pregnant. You want to sell all your shares at my price, slightly lower. Now, this is where a lot of people put it at the same price as at the price watch. Remember, TIG is at 69 Rand. Just have a few cents lower. And this is, I've got 50 cents lower. That's the worst case scenario price. So if it drops through that, at least that's a little thing you can, a little price you can match. Okay. So this scenario now, I click on submit price and stop order. Okay. So I hope you guys understand that they have to work together. Think of them as a trigger and as a bullet. So just to reinforce it again, price watch and stop order have to be used together to execute a trade. If you only got a price alert or price watch, you're going to get SMS or email. Okay. So it's important that you understand that they have to be working together. The order will reflect on your order book. In other words, on your website, but only will enter the market once the order. When I say the market, it will order enter the JSC order book when the price is reached. Okay. So guys, I hope you do understand that once you bought the share, always come back and place your stop loss straight away. Make sure the price watch and the stop order slightly bit lower, say 50 cents or 1 Rand lower, but it will trigger at your price watch. Okay. So quickly summarize before we hit questions and that. What I like about CFDs, remember, you're using gearing, you're using leverage, and you're leveraging your position to have 100% exposure. So as I say, they're capital efficient. So for a lot of people, they haven't got a lot of capital, you can put on more trades and have exposure like the big guys do. Remember also low trading costs. That also makes it attractive for a lot of small investors. You still have all the benefits of normal share trading, capital growth, as well as obviously dividends. Just understand those dividends are synthetic. And remember also it's dividends after tax. Okay. So from our side, I suggest if you haven't got a CFD account yet, come open up a CFD account with PSG. Remember we give you up to R1 million exposure without asking for additional balance sheets and things like that. Understand, if those of you are novices, I hope he gave you some background regarding the actual product CFDs, but go learn more about it. But also for you to gain confidence, go do some paper trading and maybe some simulated trading. Remember that the idea is to gain confidence. Most important thing I can take away, if you can take away from this presentation today, risk and money management is most important when it comes to trading CFDs. So the biggest challenge always is that, yes, the biggest fear or the biggest enemy in the market is human emotion, greed and fear. So you need to be able to control those emotions, teach yourself to be impartial, teach yourself to be objective. So from my side, before we hit questions and obviously upcoming events, good luck and happy trading. Okay. Let me see what questions we have at this point in time. All good. Yes, that's all the sound check quickly. Is VAT the only type of tax we pay? On capital. Okay, yeah, good question on tax. Okay, that's why I suggest you separate your trading. You want to have a trading account and you want to have an investment account. Your trading account is income tax. CFDs, even as a position trader, whatever profits you make every day is income tax. Okay, so that, yes, that is normal VAT on any transactions. That's normal. But yes, you'll be paying income tax, obviously at your marginal tax rate. But there's ways and means of making your tax rate a bit small, a bit less. Okay. Are dividends also derived? Or you're trading on underlying shares or whatever the company pays out dividends, you're getting exactly the same. So Quinn, I hope that helps you. Thanks, very informative. Pleasure. Any danger of my stop loss being triggered by someone trying to influence the market through crazy low sell orders? Yes. Neil, that could happen, yes. I was speaking just now, I spoke about these algorithms. Sometimes you'll find that there's one trade goes out and it will spike. So, yeah, that does happen. So when it comes to your stop loss orders, I always believe in placing my stop, and I get my stop from the charts. So a prominent support level, prominent resistance level, a few cents below that, 50 or 1 Rand below that. Remember, support level is low buyers, resistance is low sellers. So just slightly out of that range, I'll put my level. So if it does spike through all those traders, yeah, it does help. It does help. It happens sometimes. You might get closed out, but 9 or 10 times your stop loss is there to save you. Okay. So Neil, I hope that question helps you. Herman, is the stop loss always guaranteed? No, there is no such guarantees. And PSG can't provide those guarantees. Anything can happen. But if it's set up correctly and the order gets triggered, it will go into the market. And that's why it's important to understand, put your stop order slightly bit lower. Don't have it at the same price. That's how the system works. Okay. Your dividends would only happen while you are in the longer trade. Yeah, obviously, when it comes to dividends, as long as you're holding those shares and the company declares the dividends, you're eligible for those dividends. So it's usually on a Friday. We have what they call LDT, last day to trade. If you're holding those dividends on that day, you're eligible for the dividends. The Monday following LDT, last day to trade, is what we call ex-div date. The share price usually drops by the amount of dividends being paid out, but you're still eligible for your dividends. Okay. Pleasure, Clayton. Okay. Okay, looks like that's all the questions. Guys, just quickly, I know I've run out of time, but just quickly highlight upcoming events. There's quite a few webinars coming up. I've got run to the end of July, so please go onto our website. Remember, these webinars are limited to the first 100 people that are actually registered or logged in on the day of the webinar. So we do have situations sometimes people are getting a bit late and they don't have access. So there's a whole range of webinars coming up, number one. And number two, our upcoming Traders Forum. I'm in Pretoria next week at Centurion Country Club. We're talking the main topic, if we talk about investing offshore, where are your options available. And then I'm back in Cape Town in April. I'm using the Vineyard Hotel in Newlands for the very first time. So those of you that are in Cape Town, please come out and support us. The topic there will be selecting your shares for capital growth. So it's more fundamentals and investing. Obviously, I'll be catering for the traders also. But come along and support us. Remember, all these traders forums. It gives us the opportunity afterwards to mix and chat. We have cocktails and or figure snacks and drinks afterwards. In May, I'm back in Joburg here. We're talking about a roadmap to investment success, basically just fitting everything together. And then I'm back in Centurion again in June. We're talking about technical analysis and trading. But guys, thanks from my side. I really appreciate your support. Thanks for being on this webinar. Hope you've enjoyed it. There's my contact details. If you have any questions, please drop me an email at Sean VDB, Victor Delta Bravo, at psg.co.za. Okay. And lastly, any shares we mentioned about in this presentation, remember, it's for trading purposes only. So here's my disclaimer. So I hope you guys enjoyed it. Enjoy the rest of your day, and we'll see you next week. Bye for now.